Good afternoon, Tony. I am here with you straight off the G6 stage. This is Tony Rawlinson of KPMG, a G6 Asia Virgin on the first time on the stage here in Singapore with us. And interesting lineup today. Obviously, you were faced with a number of providers, predominantly up there, which led to a very make or buy discussion for the first 30 minutes up there. I think your point was that your background was that you're a broker, and you're bringing a lot of different things to the table here, and that's really important in the mix. Ultimately, is that what this is about? Is it about your perspective, where you're coming from?
So, confession time, I've been a service provider, I've been a client, and I've been an advisor. So I have worn all the different hats. So I do like to look at the opportunity for outsourcing and shared services through the lens of that experience across the board. So I think it's important for me as an advisor to ensure that the goals of my clients are met by service providers.
Do you think you need that background? Do you need to have worn a lot of hats to be able to have that holistic perspective?
I think it really helps, because I think I understand, for instance, the explicit profit motive that underlies a service provider's proposition when one gets away from all the sales speak. But I also understand the imperatives of the client side in terms of having to position outsourcing and shared service initiatives against a bigger backdrop of corporate change and business planning. So I do think it helps, and I'm very much a believer in collaborative sourcing, where the goals of the clients are aligned with the goals of the service provider. The risk of the client being too tough on the service provider is that the service provider then seeks to aggressively increase its revenues through change. The risk of the client being ill-prepared is that it does sometimes get taken advantage of commercially by the service provider side.
Some would argue, well, he would say that, wouldn't he? But we'll give you the benefit of the doubt on this occasion, because you allude there to being aware of the revenue opportunities involved there, and how that motive does play a part in some of these providers' decisions. Somebody has sat in this chair already today and told me it's all about money, money, money. Innovation comes second, cash comes first. You clearly have quite a strong opinion on the motivations behind providers. You talked about a link between innovation and obviously revenue generation for them. Let's expand a bit more on that. You said, and I think I'm quoting you here, correct me if it's not verbatim, innovation is essentially being used to push to close more processes from various clients. That was ultimately the point that you were making, I believe.
Well, let me first of all contextualise the comment. So sourcing, whether it's outsourcing or shared service, is definitely not just about cost reduction. Although having said that, I've never seen a negative business case on the client side for such an initiative. Increasingly, sourcing is maturing, and it's about capability acquisition, it's about risk mitigation, it's about speed to market, as well as cost. So I think that needs to be borne in mind. Having said that, I think innovation is something which, in our research, it shows up as something which clients are very disappointed with service providers on.
Is that because their expectations are too high, though? What's really leading to that disappointment?
Well, I think what happens is that the initial deal is about cost savings and service improvement, and once those are baked in and they're locked down, hopefully, and the benefits case has been realised, the clients then start to focus on secondary motifs, and one of those is innovation. And of course, it is a reasonable expectation to want your service provider to continue to add value. But I think from a relative perspective, the client's focus should be on ensuring initially it got the best deal, so that there were service improvements and cost savings committed through the core contracts or shared service implementation. Then I think it's terribly important to ensure that any transformational benefit is secured, and the necessary service provider actions are taken to commit to those opportunities. And then perhaps more important than innovation, when one's talking about the core services that are being contracted for, is continuous service improvement. So I differentiate between innovation, which typically tends to involve service providers seeking to on-sell into adjacent service areas, and create additional economies of scale or reduce dependencies or provide standardization benefits. And vertical services where the existing scope is sweated by the service provider, which I think is more about service improvements. That was the message I was trying to convey.
Any way you cut it, your experience, you say, through KPMG research, is showing a shift towards outsourcing. People are moving in this direction. Is it in pursuit of innovation, or is it in pursuit of cost, and if innovation comes, great? I think
it's more predominantly in pursuit of cost, but also service improvement and capability acquisition. I think innovation, it's a bit like benchmarking. Don't get me started on that. Benchmarking is important, yes, but it's more important to get the right deal up front. So I think what's going to happen is, as innovation becomes more central to the agenda of clients, and our research does suggest it is becoming so I think the industry is going to have to come forward with a much more systemic approach to, first of all, defining innovation, because no one really knows what it means, to measuring innovation, and then to make sure that the benefits created by innovation are fairly shared between the client and service provider. What typically happens at the moment is the client's got a contract that just plays passing reference to innovation. The client then demands it. There are no constructs in the T's and C's to actually deliver it. And the service provider starts then to get into a position where it feels that to deliver innovation is going to cost it money, and therefore is going to impact its margin. And frankly, the service provider is never going to be incented to actually deliver it. So in practice, what I generally advise my clients is, if you want innovation, make sure that those benefits, definition, validation and measurement processes are in place.
At the very beginning.
At the very beginning. And make sure also that you allocate some seed capital so that the provider is actually incented to go away and then deliver value back to you.
So essentially this is about outcome-based outsourcing, really, having a goal at the end and how we're going to get there. And if you want innovation included in that deal, know what you want up front.
But I think as you posit, the two things are linked, because I think whilst pricing is defined in terms of FTEs or transactions, there is no real basis for innovation to play. As service providers, and this is very much a trend that's happening and clients like it, as service providers provide pricing which is based on business outcomes, then I think innovation will then have a lot more leverage, because it will be much more relevant to the pricing structures of the contracts they've signed.
So give us, in summary, 3 things that you think have come out of the research that KPMG has done that are indicative that the outsourcing market is definitely evolving towards being the favoured choice, as it were, for the captive hybrid outsourced community that we're now dealing with.
So I think there's 2 or 3 things. I think first of all, build, operate, transfer, which was quite common a few years ago, is hardly ever now put forward as a proposition. Indeed, many of the propositions that were sold as build, operate, transfer became full outsourcing. I'm thinking of the likes of the big BPO that Aviva has with WNS. So I think the landscape has shifted towards clients segmenting their cost base, their process base, and increasingly being ready to commoditize their services with external service providers where they think there is not a major impact on their customer offer, their brand, their risk. So I think there's a delayering going on here, and in my experience and our research shows, clients are moving towards outsourcing more of the commodity services, but they're still very cautious about outsourcing services which are touching the customer or touching the brand.
Okay.
The other thing that comes through very strongly in our research, which I think is something of a blocker to further outsourcing, further successful outsourcing, is clients are still struggling with governance. This comes through very strongly. In a recent survey, 50% of clients felt that their governance was either fair or poor. This is being self-scoring. They're struggling to create the value. They're struggling to manage service providers, especially in multi-supplier operating models, because of all the dependencies involved. And they're also finding it particularly difficult to face off to the internal customer and translate business demand into service delivery from their outsourcing service providers.
And then finally, you mentioned functions. You said predominantly IT. You're seeing more of a move towards in terms of outsourcing. What else are you seeing functioning?
So I've spent quite a lot of my career in recent times in Europe and North America. I've recently come back to Asia. I used to work in Asia with Standard Chartered Bank in the 90s. I think the first thing to say is there's generally a flow through of outsourcing from the US and Europe towards Asia. In Asia, outsourcing is a less prevalent model, but there are strong pockets of IT outsourcing here. And there's a number of first and second generation deals. In fact, I was involved in setting up the first IT outsourcing deal with Standard Chartered back in 1994, and I believe that's now on its third relet. So there is quite a solid base of big IT outsourcing deals. I'm seeing less business process outsourcing. The more prevalent model from a business process perspective in this region is more shared services. And I think one of the things that I'm saying to service providers is they need to up their game in this region to clearly articulate their value proposition before they can reasonably expect clients to move wholesale to BPM models.
There you have it. I think we'll leave it on that note. Up your game, providers.
Exactly.
Wise words from Tony. It's been great fun having you here today. Thank you so much.
Thank you very much. Thank you.
Being part of the G6.
Thank you. I enjoyed it.
Thank you.